What's going on, guys? It's Christopher Balmaceda here with Keller Williams Realty Professional Partners, bringing you a quick little video here on Tuesday, what we're going to dub Tip Tuesday, as many have. I just haven't picked up that moniker yet, but we're going to go ahead and go with it now. I think Tuesdays are a perfect day for me to drop videos to you guys to give you information and give you tips on the real estate market here, how to navigate what's going on currently, and things that I'm seeing as far as in the media and the news and stuff in regards to how the housing market is being impacted. So what I wanted to talk about today was actually an article that I had read about a week ago, 2 weeks ago maybe, about millennials are choosing to rent instead of buy. And not because they want to, not because they feel like this is the better option for them, but because they honestly feel like this is the only option for them. What I read in the article was that a lot of millennials are choosing to stay as renters because they just don't think they can afford to purchase a home. The biggest reason being is they have found that millennials are struggling more than any other generation prior to us to save money. Whether that has to come down to just we spend more or just maybe the way the income is, I don't know. But the fact is this article came out and said that millennials just don't save or can't save in the same manner as our parents and grandparents prior to us in order to be able to afford getting a home. And that's a lot of the reason why a lot of millennials are choosing to stay as renters, because they just don't think they can get the down payment covered. A lot of that too has to do with the fact that a lot of millennials have a misconception that you have to have 10, 20, 15% down to get into a home, and don't realize that a lot of loan programs like FHA only require 3.5% down, and some conventional products allow 3 to 5% down, which is way easier to come along than 20%. But at that 3.5% on 300,000 is, I think, what, like 10, 12,000, somewhere in that range. That's still a lot of money. And if you don't have the ability to sit down and save, I can understand why a lot of millennials are choosing to not buy, because the money's just not there for them to get into a home. Even though, on average, purchasing a home and having a mortgage is way cheaper than getting yourself into a situation of renting. You usually can save monthly when you buy and own rather than when you rent. So where's the solution to this problem? How do we help millennials make that transition from being renters into being homeowners? Well, there's a couple different ways we can work at this. The first way is probably the easiest way, and that is to get you with the lender and get you qualified for a down payment assistance program. There's several of them out there. There's not just like 2 or 3 cookie cutter, you fit in this box, blah, blah. There's several out there, several options and availability for you as a buyer and a consumer to get your down payment assisted to you when you go to close, meaning that a portion of your down payment is paid for and you only have to come up with a minimum amount. One that I use pretty regularly is called Home in 5, and this program pays 3% of your down payment on the purchase price, which means you only have to come in with 0.5%. So on average, my buyers are coming in with about $1,000 to $1,500 plus closing costs. And that's something we can discuss in another video, but your down payment's getting covered, which means that if you do have some money saved or have the ability to get some funds gifted to you, you're able to get into a home for really minimal out of pocket. The other option outside of using down payment assistance is using that gifted program, where you have a family member gift you your down payment, and it's usually a letter that's written to the lender saying, hey, we're getting these funds from this family member, and then that family member saying these funds are available here, and providing bank statements, whatever the case may be. But those are 2 very simple options for you as a consumer to get yourself into a home if you don't have the money saved. Let's say that you can make the mortgage payment and you can make the monthly payment, but you just can't get the down payment. We have options for you. You just got to pick up the phone. You got to give me a call. We got to have this conversation to figure out what's going to work best for you. I've been seeing memes float around as a joke that talk about, I can afford my monthly rent, I can afford my living expenses, I can afford everything, I have a good paying job, but bank declines me on getting a loan because I don't have tens of thousands in the bank account. Well, that's not the case. You can still get yourself into a home. You just have to make that call and have that conversation so we can figure out what program works best for you. So anyways, there you have it. There's your Tip Tuesday. Down payment assistance programs available for millennials and anybody else looking to get into the market, get into buying a home. Reach out to me, give me a call, shoot me a text if you have any more questions, 623-693-5667, or you can email me at cbalmaceda@kw.com, or feel free to message me here on Facebook. Comment on the video, whatever the case may be, and let's have that conversation to make you a homeowner sometime this year and get you out of renting. Take care, have a good day, and you guys remember, you're more than a transaction.